House to Home, presented by Remax Diamond Realty.
We are House to Home, everybody. Gina, Liz, myself, I'm Jason. We are always happy to come to you on Tuesdays, as we always do. This week, we have something that we hope you will take interest in, and I'm not just trying to be clever with the wordplay, but the interest rates look like they will be going up, and quite dramatically so. So, Gina and Liz, what are you guys seeing as far as what our friends on the Hill are seeing as appropriate given the current state of economic contraction?
Well, just today, I pulled up my email, and the interest rate is up to 7% now for a 30 rate fix, and your APR is 7.37. And just know when you're getting these loans, you have to pay points, and this is paying 2 points of your loan amount. And that's with a 95.5 loan. There's also a 7.625. And of course, the APR on that is 7.9. Just look at that from one of my loans I did for my condo at 2.5. 2.5. Now we're at 7 something percent. So that really reduces Gina and I have been talking about, with the interest rates going up, it reduces your buying power.
Right.
And your mortgage payment is on the high side. So if you're buying something for 400,000, imagine paying 2,600 to 2,700 a month on your mortgage payment. So it's terrible right now, I think, for our community.
Yeah. Now, Gina, can you give us a little bit of context and perspective, right? Because of course, once the pandemic started, the feds and the Treasury saw fit to lower the interest rate to historically low levels ever, to stimulate the real estate market, because we had no idea what was going to come down the pike, and now it's gone back up. I mean, I've heard maybe general assessments that they said anything below 8 is doable, but that, like Liz just said, I mean, 2,800 a month, that's hard for a lot of Guamanians.
$2,800 a month, but only if you're in the $400,000 price range. How many houses are out there at 400,000? And even if you find the house at 400,000, realistically, how many of you out there are ready to pay $2,800 a month? Mm-hmm. That's what we're trying to
for 30 years.
For 30 years. Yeah. I mean, and that's the reason we're bringing this up, is because, for the families that have been in the market trying to look at property, what this does is, just because the interest rate goes up, it doesn't mean you automatically, your price range does not stay the same. So if you were qualified at 400,000, maybe even 2 months ago when the interest rate was, last week, the interest rate was at 6.5, okay? So if you qualified at 6.5, what happens is, because you have to pay more for the money you're receiving, because, let's face it, how many of us, okay, the interest rate went up, so does that mean your income's going to go up to adjust? No, it isn't. You're going to get what you were getting 6 months ago, maybe a year ago, you're getting that today. And so now what happens is, the amount you could borrow, let's say you were able to borrow 400,000 at 6%. Well, now you're probably at 350 to be comfortable, mm-hmm. at the 7.3%. And that's what we're trying to say. As these interest rates go up, you're going to have to adjust by getting a house that's priced less in order to keep your payments the same. That's really, that's what we're trying to tell you, people. But on top of that, this also means, because, let's face it, our market has been driven by military buyers, because they have the benefit of using their OHA to buy, to pay for their mortgage payment. So that gives them it's a good, comfortable cushion.
OHA being off-base housing allowance.
Off-base housing allowance, that's right. Correct.
Okay.
That's right.
Now, ladies, does the federal government give us any, people like myself, any considerations as far as, if the interest rate goes up, then will they kind of take into consideration maybe people whose credit scores and whose FICO scores are a little bit on the lower end, so they could still qualify, or that, irrespective of that, once the interest rate goes up, it's same deal?
Yeah, when the interest rate goes up, that's the same deal. Now, if you were at a particular bank and let's say you had a credit score of 800, you've banked with your bank for 20, 30 years, it is possible they may make you a special deal, but that's not necessarily across the board. So if your credit scores are on the high side, you might get a little break in that. But in terms of how much of a break, I doubt if it'll give you too much because these interest rates are across the board. And the feds, in terms of what are they going to do for you, at this point, really nothing. I know right now it's a gimme uh, governmental situation where the government is dishing out all kinds of benefits to the community, but just think about it, it's going to run out. So, I mean, it's a little different if they're giving monies, adding additional funding to help you buy, to make up the difference for your higher interest rate and all of that. But that isn't happening.
Mm-hmm.
I mean, that would be a great idea.
Sure.
For the local government. And it's something, we can sit and propose that, hey, here's one way you can help the community.
I'm not going to hold my breath, though. I mean, I'm not knocking any local policymakers, but that kind of thing's really, really hard. And of course, Gina, we're not trying to cause everybody to have like freak out moments or saying like, oh my gosh, this is, the financial Armageddon and everything. We're just saying, as our friend Sergeant Paul Tapau in GPD says, have situational awareness, realize what the macro economy is doing and how it affects you, and then make your decision based on that.
Well, awareness, and you have to use this situation to plan. I doubt very much that if the interest rates are going to go down anytime soon. The situation where, let's face the facts that we can't control what the federal government does. That's a given. We have to deal with what they do, and we have to, act accordingly and plan accordingly with what they do, but we can't control it. So why is this important? For Liz and myself, it's important because we do get an opportunity to talk to business people. We do get an opportunity, and we're just trying to educate our buyers, generally speaking, right? But when we are dealing with developers, and perhaps this is a great opportunity for us to reach out to the legislators and to the people that make policies for Guam and say, okay, here's what's going to happen. If the interest rates continue to go up, you really have to find a way to empower. There's a lot of people in Guam that have land, but they can't build for one reason or another. Well, perhaps that's where the local government can make a difference. Why continuously look for the federal government to help us out? Why not look to our local government to help us out and say, okay, with the interest rates going up, with the rents as high as they are, and I can't see them coming down, this is why the local government and perhaps developers need to get together and find a way to come up with solutions that's going to help everybody. And I keep harping on this. Why can't the government start looking at infrastructure? There's a lot of people with land that don't have water, power, even roads. If they did, will they be enabled to build for themselves? There's possibilities that could happen. Why not, our rules right now kind of target developers. It's like if you're a developer and you're building or you're cutting up your property into more than 6 lots and you're building so many houses, you're going to have to do A, B, C, D, E, F, G. Well, why not partner up with them and say, listen, we want you to build 24 houses or more. And if you do that, then we're going to give you A, B, C, D, E, F, G. Why can't we come from that standpoint, right? I think it's really necessary. I think our people need it. And I think, honestly speaking, we're at the point where our government can afford it. We're talking billions and billions of dollars. Well, let's start putting that where it will really benefit the local people, spend it on infrastructure, roads. That's just our idea.
Right. I'd like to say I preface that last statement by saying we're not attempting to freak anybody out. So,
we're not.
Yeah. Liz, I'd like to give you the last word, please.
No, but we've been harping on that there are federal programs that do allow for paying for infrastructure, so that if the government partnered up, as Gina puts it, with the local developers, and this gives a developer incentive to build so many houses that will benefit the community. So I think we've got so much coming in terms of federal funds. Why not channel that? Let's channel that so that it benefits the greater whole of our community.
And you're not seeing this as a possible stopgap or a band-aid or a tourniquet solution, whatever analogy you want to use. This would actually be something that would have some teeth to it, that would have, lasting impacts.
Yeah, and the only thing I see is that if this isn't done, what is going to happen? People are going to have to resort to buying fixer-uppers, because those are usually priced, but they're not priced too low. And if you've seen some of these fixer-upper, Jason, you wouldn't want to buy them. So they're going to have to start targeting fixer-uppers. But then again, there's a cost associated to get a contractor to help them fix it up. So I think at this point, we talk about emergency situation. This is an emergency situation. The government and our local community have to start looking at, so what are the solutions? So there are solutions out there, but if you're able to get a prepackaged building type that is affordable, will the bank give you a loan on it? And those are other factors that we can talk about later, but there are options. But will the bank give a loan? And we're hearing they won't, because they have to be rated a certain way. And then time will only tell whether these products will wear well with typhoons, etc. So yeah, there's just so many things to be aware of.
You know what? Let's try, maybe for next week we can try and get like a banker in here that would explain like exactly, because we're by no means are we trying to paint the banks as the bad guys and everything. They have to realize their situational awareness as well, and they're in a certain position just like we all are.
That's right. They have to follow federal guidelines. So
exactly. Yeah. So hopefully we'll have a banker next week and we can talk about this some more. But thank you guys for watching. And this is just the tip of the iceberg, as we always say on the show. So Liz and Gina, thanks for the insight, and keep your eye on the interest rate, everybody.